Hey guys, Ken from Investing Made Easy here, today with another episode of Investing Strategy Saturday, in which today's episode will be looking at another buy and hold strategy called the Modern Portfolio Theory. Before we start, make sure to like the video if it helps you and subscribe to see more strategies in the future. As we always start, what is the Modern Portfolio Theory? By definition, the Modern Portfolio Theory, MPT, is an investing model where the investor attempts to take minimal level of market risk to capture maximum level returns for a given portfolio of investments. This type of investing is used widely in the financial industry today, but before we integrate this into our portfolios, we must first understand why it is strong, but also the shortcomings of this strategy. So, why should we use the Modern Portfolio Theory? The Modern Portfolio Theory is designed to increase the long-term returns of our portfolio whilst minimizing the short-term risk. This is done by investing into a wide range of shares, which helps us create a diverse portfolio which should weather the turbulent changes in the stock market. The Modern Portfolio Theory lets us invest into large cap stocks and indexes, as well as small cap stocks and cash. Here, I have made an example of a typical Modern Portfolio Theory portfolio. Generally, a large portion, here 40% of the portfolio, would be in a large cap stock index, for example the S&P 500 or the FTSE 100. Next would come two segments, which are still substantial small cap stocks, for example individual companies, and intermediate term bonds. These would both represent a quarter each in our portfolio. Some of you may be wondering what an intermediate term bond is, but I'll probably make another video going more into depth on how to find and take advantage of this type of bond. An intermediate term bond is one that matures somewhere between the short and the long term. Though definitions vary, they mature in about 5 to 10 years. Making up a small portion of our portfolio is cash and cryptocurrencies. Cash is always good for portfolio diversification, as it's one of the most stable forms of investment, fluctuating by tiny amounts each day. The British pound is an exception at the moment, however, because of Brexit. I've added the crypto portion myself, as it traditionally does not feature in the Modern Portfolio Theory. However, with how prominent cryptos have become in the last couple of years, they can be a good investment for portfolio diversification. For instance, because of the concern floating around the US-China trade war, Bitcoin has thrived as wary investors flock to the blockchain for safer investment opportunity. So, what are the advantages of the Modern Portfolio Theory? Firstly, the Modern Portfolio Theory is a low-maintenance investment strategy, as it is part of the buy and hold strategies group, which focus on long-term growth. This generally means that manipulation of the stocks in your portfolio are minimal, as we are focusing on longer-term gains while minimizing the short-term risk. Secondly, the Modern Portfolio Theory is heavily diversified into various sizes and types of shares. This reduces the overall volatility of the profile, allowing longer-term, lower-maintenance growth. Thirdly, this type of portfolio is easy to set up for somebody with little to no experience in fundamental or technical analysis. This is because the portfolio hinges on larger, safer investment types. There are also some disadvantages to the Modern Portfolio Theory. The MPT does give out lower yields than shares built on fundamental or technical analysis, as by minimizing the risk, we are also minimizing the potential gain on our portfolio. More concerning, however, is that the investor is not likely to learn the skills behind the analysis of the stock, which will hinder their capability to make timely decisions when the market shifts, which can lead to further losses which a seasoned investor may not be subject to. In conclusion, the Modern Portfolio Theory is easy to set up and maintain without too much experience or too much time dedicated to follow the stock market. However, seasoned investors may benefit from a more hands-on investing strategy, as it can provide larger yields in the long term. In my opinion, however, I believe that combining strategies is the best way to have success. In all, I think that the fundamental analysis, combined with the Modern Portfolio Theory, and the core and satellite strategy can provide great success, as all three complement each other very well. If you'd like to find out more about both fundamental analysis and core and satellite strategies, I will link both videos in the card above and also in the description. Well, thank you for taking the time to watch my video. If you have any questions, I'll be happy to take them in the comments. If this has helped you, please leave a like and consider subscribing. as I will have more content like this in the future. This has been Ken from Investing Made Easy, and I'll see you.